and welcome to Pro Trader Strategies Market Commentary for Wednesday, August the 26th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I talk about the economic data, the geopolitical environments, how that comes in to impact the overall markets with my market analysis. And I do the same thing in these daily market commentaries, but I go a little bit further for you guys and talk about the option strategies I'm implementing into my portfolio based on those assumptions I come up with in that market analysis. I go into more detail as to how to follow these guidelines in implementing an option strategy around your given assumption in my webinar. So please go check those out at protraderstrategies.com. Without further ado, let's get on with the economic data. We got core durable goods orders coming in at 2.4%, better than the expected 1.9%, and a revision to last month's number slightly higher to 3.6% from 3.3%. Durable goods orders coming in at 11.2%, expected to be 4.4%. So crushing it there, knocking it out of the park. Slight revision again to last month's number to 7.6%. So good economic data here in the United States. Just after I've tried to put on some shorts in my portfolio to add some negative deltas. Well, we'll talk about that here in a little bit. Crude oil inventories coming in at a drawdown of 4.7 million barrels, expected to be a negative 3.4 million barrels. So a bigger drawdown than expected, showing a little bit more demand. As a matter of fact, yesterday while I was out driving around, I noticed more cars on the interstate and a little bit more traffic in and around my area. So that's not really a huge surprise there. Durable goods orders, not necessarily a surprise, as we've been seeing this stimulus checks really driving this overall market. Still not seeing anything come to fruition for the next round of stimulus, as the Democrats and Republicans are really fighting over how much money and where that money is going to be allocated. So nothing really to find out there. Well, crude oil starting to make a bit of a claw back towards that $45 a barrel area. And that probably is getting a little bit more likely that we could break through that 61 Fibonacci that we have lined up right here, and a crossover from the 200-day and the 50-day. And when the 50-day crosses over the top of that 200-day, that is a very long-term bullish sentiment in the markets. All right, gold futures driving back today about $28 after continuing to test that all-time high we saw back in 2009 at 1923. That has acted as support. I've talked about this time and time again. I think that it's going to hold that support area and retest that 2000 handle likely next week, but we might even see that, this week. It's clawing back quite nicely today. Bonds are off by almost a full point. Again, think it's going to stay in and around this area and hold on to the 176 handle. I think that's going to hold true. As a matter of fact, Fed probably isn't going to raise rates for the next 5 years at least. Yes, this is a longer term bond there, but I don't think that we're going to see that long tail of the bond really start to increase in that interest rate anytime soon. All right, VIX is coming off, and that's because we're seeing the equities really start to push higher. Dow Jones was in negative territory, making that chart look like we were really topping out, but there's a couple of earnings that came out and really showed that the tech sector is very strong, as this home office that I've been talking about for so long since the pandemic started, that people would be building that out. Well, businesses are doing the same. And as they're allowing people to stay at home, they're allowing them to build out that home office, some on the corporate dime, as well as how does a corporation keep track of their employees when they are not in the office? Well, CRM, and that is what we're seeing here. Now, NASDAQ blasting off 200 points today, really led by that tech sector that is doing very well in this type of environment. And you can see testing the upper band of that trend line I showed from way back in the day, it seems like, and back into that trend channel. Are we going to hold on as that being resistance? We're going to have to see, but breaking out of, even if I extend this trend channel to, let's extend that to the right. You can see it is going to go up there to look to test that right now. Just unabated to the upside in these equities today after we're getting this good economic data points and basically the Fed signaling they are not going to raise interest rates for the next 5 years or so. Keep in mind, we do have that Jackson Hole Symposium, which is going to be very economic sensitive information coming out of that. That's where we're going to see Powell talking a lot and get a lot of real insight into the overall economic picture there. So keep your eyes out for that stuff too. This is really probably going to continue to the upside as we're seeing a weaker dollar, a longer term outlook on lower interest rates. That's good for this overall equities market, and we're seeing that come to fruition today as we're blasting off to the upside. E-mini S&Ps, you can see unabated to the upside, not even a red candle in today's market action as this economic data really pushing this market higher. Something to talk about is my portfolio and getting out of some of my positions here in the that I put on just yesterday. Really not getting the market set up that I was thinking. You know, I pressed it a little bit longer than yesterday. I was hoping to get a little bit more of a confirmation after getting this guy right there. That started to look like a real topping pattern. And then I got yesterday's. Now that could still be considered part of this topping pattern in candlestick setups or reading the tea leaves of the candlesticks. Well, today that blast off to the upside really broke that whole pattern setup, and it's really just not going to work out there. So in SPY, if you guys remember, just yesterday I put on this trade and I had done the December. I bought the 327 puts in there for $13.31. I covered those today for $11.93. Yeah, I'm getting a little. I got to keep my eye on the difference between the Qs and the SPY because the pricing literally is lockstep in line with one another. So I just want to make sure that I'm keeping you guys clear of concept there on which prices I paid for what. I don't want any mistakes there. So in the Qs, again, pulled the ripcord on this. Yes, yesterday, if we're talking about on Monday, that setup looking pretty good. Yesterday, well, not getting a confirmation, but it's really not really breaking this whole pattern. Well, today, yes, it broke that pattern, so I'm out of this trade as well relatively quickly. And again, I did the D's, and I had bought the 268 puts in there for $13.21. Covered those today for, what was it? The Qs I covered for $11.95. I should have remembered that one. It was the low of the day. So sold somebody that low of the day, at least at that point. I don't think that's probably the low anymore as we have continued to rally since then. And one last thing, part of the thing that is really driving this market today, CRM, which is Salesforce. Now, as the sales force of the U.S. economy is at home, look at this move up almost 27% right now, $58, crushing it. You can see their earnings came out at $1.44. I think they were expecting 19 cents, so just blowing it out of the water here with that. There it is, 19.2, and obviously something with Salesforce or these CRMs, for lack of a better phrase, they are really doing well in this environment because the company wants to keep track of their sales force at home, making sure that they are staying up on their workload and they can track it a little bit easier that way. Well, this is a monthly type of service, and I think that they are going to continue to see this as more and more people are wanting to work from their home offices. So Probably should have seen this one coming. I kind of lost track of CRM on this and probably would have played this to the upside, but I did not play this for the earnings. And as you can see, they are doing very well. And that's all I've got for you guys today. One last thing, check out our disclaimer. As we are an educational company, there are risks involved in trading. You need to know your risks that you're getting yourself involved with when you're trading anything from stocks to options. So please take a moment to go over this so you understand that. We are not trying to give you guys trade recommendations here. All right, so that's all I got for you, other than if you can't take that, take it easy.